The U.S. inflation report for December delivered encouraging signs that price pressures may be moderating. Consumer prices rose moderately in the final month of 2025, but the closely watched core inflation measure, which strips out volatile food and energy costs, climbed by less than economists had forecast. Headline inflation increased by 2.7% on a year-over-year basis, matching the previous month's pace. On a monthly basis, overall prices rose by 0.3% as costs for housing, food, and other essentials continued to climb. However, the core consumer price index showed a more modest 0.2% monthly rise, slightly below market expectations and underscoring a cooling trend in underlying inflation. Core inflation on an annual basis also eased to 2.6%, the slowest pace since early 2021, suggesting that broader price pressures are gradually softening. The smaller than expected core CPI gain may offer some relief to policymakers at the Federal Reserve, who have been carefully balancing efforts to keep inflation in check without derailing economic growth. While inflation remains above the central bank's long-term target, the data raises hopes that price rises could continue to temper in the months ahead, potentially giving the Fed more flexibility in its interest rate decisions. Consumers and markets alike will be watching closely as the new year unfolds, looking for further signs that inflation is returning toward more sustainable levels.